This is the Ikusflow weekly market map. Last week the question was simple. Did the backdrop get easier for risk, or did it get tighter? The interesting part is the split. Some charts are saying conditions got easier, while others are still warning that the market is not getting a clean green light. We have 20 usable indicators. I am using the charts for context, not reading a spreadsheet. The main risk-on charts worth paying attention to were Fear and Greed Index, ETF flows, thermocap. The main risk-off charts worth paying attention to were Move, High Yield, USO2Y. Now global liquidity. Is the funding backdrop actually getting easier? PBOC. As you can see on the chart, the line is mid-range, and follow-through is muted. The weekly move was plus 1.0 BCNY. That is easier funding, but still needs dollar confirmation. That is the first clue. Now we need broad liquidity confirmation, not one isolated pocket. ECB. On the chart, the line is still upper range and follow-through is muted. The weekly move was minus 0.30%. That is tighter funding, so pressure stays on. That gives us the first cross-check. Now we need broad liquidity confirmation, not one isolated pocket. Fed. On screen the line is mid-range, and follow-through is muted. The weekly move was plus 0.17%. That is easier funding, but still needs dollar confirmation. So liquidity is supportive. Dollar and credit are the confirmation check. Now dollar rates and credit is stress confirming the move, or pushing back against it. Move. As you can see in the chart, the line is mid-range 15% below that high, and momentum is rising. The weekly move was plus 5.49%. That keeps conditions tight, not clean risk on. That is the first clue. Now we need to know whether stress is fading, or just moving around. High yield. On the chart, the line is mid-range and momentum is rising. The weekly move was plus 1.29%. That keeps conditions tight, not clean risk on. That gives us the first cross-check. Now we need to know whether stress is fading, or just moving around. USO2Y. On screen, the line is mid-range, and momentum is rising. The weekly move was plus 0.48%. That keeps conditions tight, not clean risk on. So pressure is defensive. This is the risk confirmation layer. Now crypto flows. Are macro conditions turning into real crypto demand? ETF flows. As you can see in the chart, the line is mid-range, 40% below that high, and momentum is rising. The weekly move was plus $557.7 million. That shows macro support reaching crypto demand. That is the first clue. The test is real demand, not just a nicer macro headline. Open interest. On the chart, the line is mid-range, 13% below that high, and momentum is rising. The weekly move was plus 5.44%. That shows macro support reaching crypto demand. That gives us the first cross-check. The test is real demand, not just a nicer macro headline. Stablecoin supply. On screen the line is mid-range, and momentum is rising. The weekly move was plus 1.30%. That shows macro support reaching crypto demand. That gives us another cross-check. The test is real demand, not just a nicer macro headline. Breadth index. The useful visual is this. The line is still lower range, and momentum is rolling over. The weekly move was minus 0.17%. That says crypto demand is not confirming yet. So crypto flows are supportive, useful confirmation, not the starting point. Now, Bitcoin cycle. Is Bitcoin in a healthy trend, or is the setup getting stretched? Fear and Greed Index. As you can see on the chart, we are at a new visible high, and momentum is rising. The weekly move was plus 111.11%. That keeps the cycle red healthier. That is the first clue. Here the question is health versus crowding. Thermocap. We are at a new visible high, and momentum is rising. The weekly move was plus 22.46%. That keeps the cycle red healthier. That gives us the first cross-check. Here the question is health versus crowding. Mayor bands. On screen the line is still upper range and momentum is rising. The weekly move was plus 22.09%. That keeps the cycle red healthier. That gives us another cross-check. Here the question is health versus crowding. Social heat. The useful visual is this. We are at a new visible high, and momentum is rising. The weekly move was plus 0.10%. That keeps the cycle red healthier. So the Bitcoin cycle is supportive. That tells us whether the move has room, or looks stretched. A few slower indicators did not publish anything fresh. BOJ, BOE, Global M2, DXY, Monthly RSI. That matters because no new print is not the same thing as a new signal. The practical takeaway. Start with liquidity, confirm with dollar and credit, then use crypto flows as the demand check. This is a map, not a trade recommendation. The edge is knowing which part of the chain is improving, which part is arguing back, and what has to confirm next. Track the live dashboard at ikusflow.com.